Hello. I just had to welcome you this evening, this morning, this afternoon, wherever in the world that you're in. I just wanted to do a quick video because I get a lot of questions about how much life insurance does Cash Value King have and why does he have so many for the people that do know. So I want to address that today and help you understand why. So yes, for those of you seeing me for the first time, my name is Douglas Eze. I've been in the financial service industry for over 20 years, really from West Africa, Nigeria. Got into this industry. I was waiting table at IHOP. I was 24 years old when I got into the industry. I didn't know a whole lot about finance or insurance or any of those things, right? But when I got into this industry, I wanted to do things a little bit different. As I started understanding how life insurance worked, how financial products work. So I went ahead, I got all my licenses. I got my mutual fund, Series 6 license, 7 license, 63 license, life and health license. But then as I continued to dig into this business, I realized, wait a minute, there's a difference between the way the wealthy people operate and the way everybody else operates. So I say, you know what, I need to do things differently. I need to start thinking like a wealthy person. So yes, so that's me, the Cash Value King. So I want to address that question. So if you don't follow me, go ahead and hit the subscribe button, like the page, share the page, because we're going to educate you today. So I own 15 life insurance policies. Now, yes, it's a lot of policies, and you might be like, why? Well, because I don't believe in the banking system. I don't believe in keeping my money in a bank that is abusive. So normally, when I first got started in this industry, I was that guy that would say, man, you need to keep 6 months emergency money in the bank. You need to keep 12 months emergency money in the bank, right? I was that guy. But then as I continued to grow in my business, I started wondering, I said, wait a minute, why is it that the bank is only paying us 0.1% interest? And I actually sat and asked the bank manager, why is that? All the money you guys make, why don't you give us more? Oh, well, we do it in CDs, or we do it here and there. Just all bunch of excuses. But then they charge you a high interest on a credit card with your own money. And then I realized, you know what? The government gives the bank the idea to do those things to us, right? The government allows the banks to do that. So I said, man, I need to start researching wealthy people. Where do they put money? And I started seeing this Cash Value life insurance. I didn't know what that meant. I didn't even know, because I was selling back then. When I first started, I was 24 years old. So forgive me, I was selling what they call deposit term with the company that I started with. What is deposit? Are you like, what is that? Well, it was a way to save money for your children's college. But because I didn't know that much, I didn't know a whole lot about insurance, I thought that was the best thing ever. Basically, it was an expensive term insurance. Very, very expensive. It was a term insurance mixed with an annuity. But that's another story for another day. Let's keep it here. So as I researched and I got out of this, I said, you know what? I'm going to start with a policy. So my first Cash Value life insurance was $150 a month. $150 a month. I was putting that money in there. And then guess what? Then I saw my 1099. I made $250,000 in income. And I'm like, Douglas, where's the money? Where is this money? I'm like, I don't know, dog. What did you do with it? I'm like, man. So I looked at my car. I had a Mercedes Benz, folks. Man, don't blame me. Don't kill me, because I'm a young guy. I had a Mercedes. I bought a brand new, nice Mercedes. I was paying an expensive car note. My car note was $1,500. And I was spending money because it's new money. When you have new money that you never made before. Remember, I was working on IHOP, and now I made 250 G's. So that's called new money. So I was blowing it. So I had to have a conversation. I call it a come to Jesus conversation. And I said to myself, Douglas, you crazy. You need to simmer down and stop putting away money. And I said, okay, I need to put money in mutual funds. So I started putting money in mutual funds. I created a SEP IRA because, again, I'm a financial planner. I'm a securities rep. So yeah, I'm putting mutual funds. I had all the funds, American funds. I had all these guys, right? So here's the kicker. So my dad got sick, folks. My dad got sick. And remember, I'm from West Africa, Nigeria. He lives in Nigeria. He got sick. And I needed to send him to India because to get him a visa here was going to be tough to come to America. So I said, India, we could take him there. And Indians, they have great doctors. He had to go to Mumbai. And I said, okay, what am I going to do? So we got the visa, we paid for everything, the package for the hotel, everything. I got the money out of my SEP IRA, folks. So I took a loan from my SEP IRA. And I knew you had 60 days to put the money back in. So I said, sure, I'll put it back in 60 days, no problem. So guess what? My dad had a successful surgery. Thank God he had a successful surgery now. But he's late, he's passed on now. But back then, the surgery was great. I was able to pay for him. My mom paid for the hospital, paid for the hotel, everything. So I took out, how much did I think it was about $30,000 from my SEP IRA. 30 G's. I had 60 days to put it back. And I figured, okay, I'll put it back in 60 days. But here's the kicker. Here's what got me. So when it was time, and I was counting, I thought it was 60 calendar days, right? That's a difference. But it wasn't 60 calendar days, folks. It was 60 business days. That means Saturday and Sunday wasn't a part of that situation. I'm like, whoa. So I had 4 days to put $30,000 back into the account. And then guess what you had to do? I needed to see where was the market at that point. Because remember, it was a mutual fund. Because it's a mutual fund, when you take money out of a mutual fund, you sold your shares, right? So I took money out. I guess, remember what they say? Buy low, sell high. So I sold it. I don't know how high it was, but I sold it. I pulled $30,000 out. And then when it was time to put it back, so I made a note of when I sold it. Or I sold at this price. Let me see. When I put it back, I want it to be lower than that price, so I'm buying more shares, right? Well, it didn't happen that way. When I was gonna put the money back in, the market was still high, and it was higher than when I took it out. So when I put the money back in, it was less shares. So my $30,000 that I put back in wasn't $30,000. Folks, this will kill you. This will mess you up, because it messed me up. Guess how much it was, folks? $20,000. Whoo! I was like, oh my goodness, man. I lost $10,000. I gave 30 G's and I only have 20 G's in my account because I bought shares at a high price. I'm like, there should be a better way. So that was the first one. I said, okay, what am I gonna do? So again, I continue researching, trying to understand this money game, this system, all that. Then I started talking to people because, when you're by yourself, you think you're the king. But then when you start branching out and open up your mind and start speaking to it. Back then, they didn't have YouTube and all this stuff that you guys have today. We didn't have all that. But I started talking to folks, some other advisors that are more successful, that sold a lot of cash value insurance. And they started educating me on it. I said, wow, really? So I said, all right, Douglas, let's go ahead and put some money in this cash value insurance. And I started putting money in life insurance, and I increased my contribution from $150 to $500 a month. And I didn't have whole life insurance. I had Index Universal Life. Index Universal Life was what I had. And by me having Index Universal Life, I was able to put money in. It was flexible, so sometimes if my commission was low, I'd go down, because that's the flexibility of Index Universal Life. Now, today I own Index Universal Life. I have whole life insurance. I own all kinds of policies. I have policies on my kids. I have policies on my mom. I have policies on five. So that's why I have so many policies, folks. But long story short, just to bring it home, today I have all those policies, and it's been able to do a lot for me, folks. Because now I understand life insurance. That's why I speak about it. I preach about it because I believe, we have to be students of what we do. We need to understand everything we do when it comes to our business. So, folks, that's what it is. So, today I own a lot of policies, and I've been able to use life insurance to start a business. I opened up a medical practice for my wife when I was married, and now she's an ex, but we have beautiful children together. So she runs a very, very successful medical practice, which is a medical weight loss. It still has my name on it. It's a family health center, so I'm excited about that. It's good. Hey, why not? And then I've been able to use it to buy real estate properties, invest in businesses. I own a technology company with my business partner. We have an app, all from this business. I've bought cars from it. I've used it to invest in a lot of real estate investments, so many things that I've done with it. So I've put myself in the position of the bank. So I could look at any of the policies and I could take money from each one to do investment. And if you watch some of my videos, I talk about how you could use life insurance as an opportunity to get money, a way for you to build cash and use it to go leverage. And that's one of the beauty. So here's the difference now between life insurance loans and a mutual fund loan. So remember how I lost money in the mutual fund because I sold, I put the money back at a high price, went in and I took it out at a low price, right? So I lost money, and then I only had 60 days to put the money back, 60 calendar days, business days. But with life insurance, it's different. When you borrow money from the insurance company, this is what they do. Very simple, folks. The insurance company will take their money and give me a loan based on their money, right? And then when they give me their money, my money still stays in the account growing, like I never touched it. All right. And then I take my time. There's no 60 days, there's no 30 days, there's no penalty to put the money back. I could put it out whenever I want. If I don't take my time and put it back in a year, there's no pressure. There's no stress. They don't report me to the credit bureau. In fact, there's some benefits that they have. Let me read some of the benefits of Cash Value Life Insurance. So if you have a pen, write these benefits down for you so you know. All right. The death benefits are tax-free. So I'm going to read it out. Okay. The death benefits are tax-free. Cash value, you could do a withdrawal. And if you want to do a withdrawal, you can, or you could take a loan. I prefer loans because it's a tax-free loan, and when it grows tax-free. You don't pay no taxes. It's not like you're not paying taxes on the gain. When you think about your mutual fund, you pay taxes on the gain every time you make a profit. When you think about your savings account, you pay taxes on the gain when you make a profit. The principal is always guaranteed. Compounding interest, another benefit. You lock in the gain as well. And you could use it for education for your kids, and it doesn't show up on financial aid application. It's actually better than the 529 plan. That's why I have policies on my children. Okay. You could use it for emergency. Remember that emergency account? Instead of using savings account for your emergency accounts, I use my Cash Value Whole Life Insurance for emergency accounts. And because I've had my IULs for a long time, I also use that for emergency accounts. I use it to go on vacation. When I want to go on vacation, I went on a beautiful vacation, I pay with my life insurance. I've used it to rebuild my credit, to build my credit from where it was bad credit. Now I have an 850 credit score. So a lot of benefits that life insurance gives you. Is flexible, you get compound interest, it's competitive rate of return. So many benefits, folks. So I just want to, share that with you, help you understand. So I hope this answers your question on why the Cash Value King, why he has so many policies. And I'm a big believer in doing the same thing that I preach. If I'm telling you to put money in Cash Value Life Insurance, because I'm doing it. And if you meet a financial advisor that is telling you to do something, you ask them, show me your portfolio. Let me see how all this investment is working for you. And you'll be surprised that some of these people don't even have money in the accounts that they tell you to put money in, right? So be very, very careful when that happens, all right? So that you don't become a victim of somebody telling you to put money in things and they don't even have money in that, And so those are some of the benefits that I have, and that's why I do it. So thank you so much for watching. I appreciate you. See you at the top. Let's keep making it happen. I'm signing off, and this is your boy, Cash Value King. Peace, and have a great day. Thank you so much. Bye-bye.